Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you for a weekly stock market analysis for the week of September the 22nd, 2019. We'll start off this video this week with some very positive news coming out of our company. We just released our first book on the stock market. As you see in front of you, the title of the book is called Money Moves: Insider Secrets of the Stock Market Every African American Professional Woman Needs to Know Now. Very excited about this. We launched this past week and have seen some tremendous feedback from all demographics on this book, and we encourage you to download it. Temporarily, we are giving a free download. We will put the URL in the video and in the speaker notes at the bottom of YouTube. As well as we've seen some very positive feedback on our YouTube channel. If you do have some feedback for us, we're always looking to enhance, to provide the best product possible for you. That's our ultimate goal, is to ensure that you gain as much knowledge as you can on the stock market to increase your participation and ultimately helping you create generational wealth. So with that, we'll jump right in to our weekly update. We'll start off with the S&P 500 Exchange Traded Fund, or ETF, SPY, which mirrors the S&P 500 index. On a weekly chart you see in front of you, we do see that we have seen some pretty consistent bullish runs for price action over the last few weeks. However, this past week, we did see a reduction of price as we did look to try to take over all-time highs. You do see a high denoted in front of you here. However, on the true index, we did not make an all-time high, which is a slight indication of a bearish signal as the bulls look to take off a few positions as we look to kind of close out the quarter at the end of September, as well as now that we have had our macroeconomic news, specifically around the FOMC announcement this past Wednesday. The market has looked at this as an opportunity for some price reduction as the Federal Reserve has reduced interest rates by 0.25%. The market had anticipated this pretty much over the last few weeks. However, as that news came out on this past Wednesday, there was a nice back and forth action throughout the day, but ending the day on a negative note and definitely closing the week on a negative note as well, is a clear indication from a weekly time frame perspective that the bulls are looking to reduce their positions, as well as the bears looking for opportunities as we are getting closer to all-time highs and some type of resistance for looking for short opportunities. Now, given this information, it does continue to highlight an potential opportunity of some sideways action as we look to continue over the next few weeks to close out the month and the quarter, as well as some opportunities for some consistent information that is coming out of the White House and China from the tariff perspective. So we are seeing some aggressive back and forth continued, very much to what we saw over the last few weeks earlier in the summer, where we were just kind of back and forth with no clear direction. We do anticipate a little bit more of that as we close out September, as we have not reached all-time highs, which is, as denoted, a potential bearish signal for us, for looking for us to kind of reduce price back down to roughly the $295 amount, which will map right into our value area high and a moving average. So our bias for the S&P 500 moving forward over the next few weeks is sideways to down, with any type of opportunity that comes about from a China perspective. All of that could go just the opposite direction and we reverse right back down. But we do anticipate some type of movement in this fashion as we've moved up, kind of come right back down and then push up higher, with that support being roughly about the $294 level on the SPY. With that, we'll move on to the Nasdaq. We saw similar action with the price reduction coming into this week, with a similar movement over the last few weeks in conjunction with the overall broader market. Very positive, bullish action over the last few weeks. However, we do see no all-time highs denoted here, as well as what we call a look above and fail over value area high, where the bulls look to kind of sell off and reduce their positions, very similar to the Nasdaq. And as the latter part of this past week on Friday, we did see a nice strong sell-off as the Chinese delegation looked to depart the U.S. and kind of pause our U.S.-China tariff discussions. Now, the tariff discussions do impact the Nasdaq, which is very technological weighted on an international production basis. Some of your larger tech companies, Microsoft, Apple, Intel, do have operations in China, and they are heavily weighted to those operations. So we did see that as a overall impact to the market, but then specifically much, much larger on the Nasdaq. Now, we do anticipate, we do see some support roughly about the $288 level as an opportunity for us as a potential rebuy, and similarly to what we denoted on the S&P 500, kind of this action, kind of a up, pull back, and then look to try to breach all-time highs. Now, any of that could come much, much sooner if there is some indication of a resolution of the China-U.S. tariffs. Now, the United States President Trump, did denote that there is no major rush. However, there are some opportunities that this is impacting the U.S. economy, and we will take a look at that. The charts do not lie, so we will watch this moving forward. As always, toward the end of the quarter, we do see some slight sell-off to kind of lock in some profits and showcase some positive growth for all of your larger mutual funds and larger big institutions. But we do see, again, very similarly for the S&P and across the board for most of our indices, some sideways action moving forward over the next couple of weeks. We will watch that. Now, as the Nasdaq has pulled back into value area, the next logical location will be the upward trend line from a long-term perspective. At the same time, we do see an opportunity to come back down into roughly the $185 amount as an opportunity, but this does coincide with our shorter term trend line as well. So we'll move on to the Russell. So as always, the Russell tends to kind of lead the pack from a directional perspective, as the Russell 2000 is very much weighted to U.S. stocks almost in its entirety. And we do see the tariffs beginning to showcase themselves in corporate earnings reports, as well as forecasts for the upcoming quarter. As we see here, the IWM did have a double top and a kind of a look above and fail similarly to what we would see on the other indices, but we do see an opportunity roughly about the $153 amount as a support for a potential movement back upward to the top end of the range. Now, if we do breach that 152 this week, we do see it beginning to slowly but surely roll down, and our next target downward would be toward value area low, which is roughly about $146. So we'll continue to watch this, beginning to showcase some signs of weakness for the broader market as the back and forth begins to take place with China and the U.S., despite some very positive news from a macroeconomic perspective, as the Federal Reserve has reduced interest rates. That has already been embedded into the market, and looking at as opportunities for the bulls to step in at lower prices to begin to push us much, much higher. Now, we are significantly lower on the Russell than we are from the Nasdaq and the S&P, as close to all-time highs. So there is that opportunity for us to see some pushes much, much higher. But overall, our bias for the Russell coming into next week is sideways to down, with support at roughly about $152 level. So we'll leave it right there for this week. We'll try to keep our videos relatively short. And thank you for all of our new subscribers and new followers. As stated at the beginning of the video, please don't hesitate to provide feedback. Our main goal is to provide a service for you and to help you understand the markets just that much better. As with that, I will say thank you and take care. As always, it's your money and it should be under your control. Take care.